Sell and selling are not really words gold and silver stackers tend to use. We tend to think more along the lines of buy and hold on for dear life. Sell in May and go away typically applies to stocks, but does that sentiment apply to gold and silver investors and prices? For the record, the nerd in me has to share that the original phrase is actually sell in May and go away, come back on St. Leger's Day, which was a horse race held in London during the late 1700s. Nerd alert. Hey, okay, cool. I'll accept that. At any rate, the phrase was an adage that British investors should sell their shares in May, relax, and enjoy the summer months while escaping the London heat, and return to the stock market in October, which has been adapted and adopted here in the United States, as May through October are supposed to be down or slow months in the stock market. Investors just love adages, proverbs, and short little simple statements that on the surface convey a general truth or piece of advice. And while these things can be really helpful or useful in certain situations, they are also dangerous if we follow them blindly. Let me give you a quick story that drives this point home. Come on, I'll make it quick. There was a couple, they grew some hot peppers in their garden and they were extremely excited by their harvest. They wanted to quickly dry out the peppers so they began using them. Not knowing the fastest way to dry out the peppers, they asked their Amish friend, who also grew peppers, what they should do. Their friend suggested that they use the microwave to quicken the process. Within a few moments of microwaving the peppers, sickening fumes filled the kitchen, immediately driving them out of the house coughing and gagging. As they sat outside, feeling the after effects of the microwave peppers, waiting for the fumes to clear their home, almost simultaneously, they looked at each other and wondered, why in the world would they take advice to use the microwave from someone who doesn't use electrical appliances? As investors, we have to resist the temptation to blindly follow adages simply because they roll off our tongue. We have to consider the history, the context, and the recency and relevance of that advice, and of course the person sharing that information. Because this adage about sell in May and go away suggests that the stock market underperforms at the start of May, and then investors hold on to their cash, and then ultimately return to the market sometime in November, and then the market picks back up again. Well, historically, that data generally supports the sell in May, go away adage, but since 1945, the S&P index has gained a cumulative 6-month average of 6.7% in the period between November to April, compared to the average gain of around 2% between May and October. So you can see these aren't really terribly down months per se. Furthermore, the S&P 500 typically generates a positive return roughly 66% of the time from May to October, while the percentage rises to only 77% from November to April, as this chart shows. Some of this tends to be related to investors being less optimistic with first quarter results, and then people spending less time paying attention to stocks as they plan and prepare or even go on their summer vacations. But I also need to point out that returns have often varied during these times, and there have been many exceptions to this kind of rule that we have, mainly due to socioeconomic conditions, the business cycle, and the market environment. This is particularly important because in the precious metals world, we also notice some seasonality changes in prices during this period of time as well. It's important to note that we can't always rely on historical patterns to predict the future, especially during unprecedented times like now. Take a look at the next few slides that use data over the last 20 years, which shows the tendency of metals to underperform during the summer months, like this chart of gold prices in different currencies. And I hate to do this to you, but look at what happened last year, and what happened with gold prices. Then there's this historic chart, and the numbers just aren't very good in support of prices of gold and silver advancing during the next few months, at least historically speaking, as January and December are typically strong months, while June is usually the worst month. However, as the banking challenges have shown us, things can change on a dime. But historically speaking, some of that price lag can be directly tied to demand declines coming from China and India with the passing of the Chinese New Year, a lack of festivals or weddings on India's Hindu calendars, fewer gift events across Europe and the Americas with holidays like Valentine's Day passing. Though the data covers different time periods, the next few slides reinforce the general trend that we've been discussing. So be prepared to pause the video or take a few screenshots of the next few slides. Now that we separated the wheat from the chaff, we need to determine what this really means for us as holders of metals before we start to pontificate on what to do with the information. Let me share one more piece of data. As of today, May 1st, CNN's Fear and Greed Index is showing a score of 61, which indicates that there's a solid level of greed in the stock market. And while that doesn't necessarily translate to precious metals, I do think it's important to juxtapose that against 1 year ago when the index was at 14, which was extreme fear. At first blush, I just couldn't believe how in the world people would feel greedy with everything we know and see going on in the market. But as Warren Buffett says, we should be fearful when people are greedy and greedy when people are fearful. Let's go back to last summer. I know you don't want to look at this chart again. So before we do that, if you're enjoying this content, learning something, or mildly entertained, could you please hit the like button? It helps the channel, it sends a good message to YouTube, and it's just good for my self-esteem. I know I should be better than that, but I'm not. So help a brother out. Also, make sure you get over to Discord as I provide additional content and support. Like last month with the help of my lawyer, we covered the basics of estate planning for our members. Also, thank you to all the channel members and Discord followers. Y'all are truly amazing. Okay, back to last summer. And think about the CNN fear and greed market sentiment. It was at extreme fear. And what did we do as Stackers University? We did our very best to be greedy during that time and stacked as much metal as we could for cheap. Which makes me think, is this setting us up for a summer where the opposite will happen and metals will begin taking off right as the stock market investors are feeling greedy and maybe setting themselves up for a huge fall this summer? Think about the big macro picture here for the moment. The Fed continuing to raise rates, the abnormally strong dollar, yields, bank failures, softening real estate market, looming credit issues, unemployment, and a potential recession, and I can keep going. So why are people feeling greedy? Let's go back to the anatomy of a bubble chart, which I've shown you at least a dozen times, it feels like. And I placed big red circles around 2 points because maybe, just maybe, stock investors are looking at this from the mountaintop and we're looking at this from the valley, and the perspectives are very different. Maybe the recovery from last year is their bull trap as they refuse to face the new normal and desperately want to believe that things will go back to normal as they always have. While last summer was the bear trap for us precious metals investors. If we follow Rick Rule's perspective of this is not an issue of if there will be a precious metals bull market, but merely when, then we can deduce that fall is almost always a good time for metals. Then we can make a reasonable assumption that there's no way in heck we should sell in May and go away. But instead, we should be stacking in May and riding it all the way. See what I did there? You can stay in May, go away, stack in May, and ride it all the way. All right, never mind. If by some chance we get any significant pullbacks this summer, they just may be our last opportunity to buy metals at these prices. I'm not sure I ever really believe in, quote, backing up the truck, but I will tell you, if there are some significant pullbacks, I will definitely be opening up my trunk at least. In the comment section, let me know what you think about what's going to happen this summer. Do you think prices will soften? Do you think stocks will fall and people will finally and truly rush into metals for safety? What's your price prediction for the end of the summer? School's out at the end of May, so you better put those A's in the comments or the grade book so everyone knows what kind of student and stacker you really are. Always stack smarter, never stop learning.